Not hearing audio, Mr. Treasurer.
Mr. McLaughlin, do you hear us?
I do now. Thank you.
Great. Thank you. Okay, so I called the meeting to order. That was all I did so far. Thank you for letting us know that you couldn't hear us. Appreciate everyone being here. Excited to have this be a regularly occurring feature on our calendar. Let's call the roll to make sure that we have a quorum.
Okay, this is Cindy Aiken, Assistant General Counsel. And at this time, the agency has one vacancy, so 6 active members. We need 4 for quorum. And Treasurer Briner is here in person. And Mr. Benny Bowers
Here.
is here in person. Mr. McLaughlin
Here.
with us virtually, and Mr. Bowen
Here.
virtually, and Ms. Arnold, are you with us?
I think she's under the attendees instead of staff, so she is self-muted if she wants to unmute herself.
Okay. Mrs. Arnold, if you can unmute yourself, try that, please.
I am here. Good morning, good afternoon.
Thank you. And is Auditor Bullock?
Thank you.
Virtual.
Not see
Not at this time. Okay, well, we do have a quorum, and for staff, in addition to me, Carolyn Hayden is with us from our staff, and Laura Rowe also participating. Thank you, MJ and Lindy, behind us for the audio work. Just quick meeting procedures. Those of you who are in the room, just be cautious about the microphones and the ceiling are pretty sensitive, so please have any conversations outside. This meeting is being recorded in accordance with our department's public meeting recording policy. It will be available on the website, as well as our agenda is available on the website at www.nctreasure.gov at the agency's page. If there are any changes to the agenda, the chair will announce that along the way. If we have any audio glitches, which we certainly hope not, the meeting will probably still be recorded. We will see what happens with that. Hopefully get ourselves back online. I think that's it. Oh, all motions and seconds without objection by the members, we will take those as yes votes unless you want to change your vote during the roll call. That's it. Thank you, Treasurer.
Thank you. Will you please join me in the Pledge of Allegiance and the salute to North Carolina flag? I pledge allegiance to the flag of the United States of America, to the republic for which it stands, one nation, under God, indivisible, with liberty and justice for all. I salute the flag of North Carolina and pledge to the Old North State love, loyalty, and faith. Thank you.
This is Cindy Aiken again. Auditor Bullock has joined us, so
Perfect
we
timing.
have all 6 current members are in attendance. Thank you.
Okay. So let's begin with conflict of interest. Please take a moment to review the agenda. Agency members are reminded of your duty to avoid conflicts of interest. Does any member have an actual or potential conflict of interest with respect to any matter on the agenda? Okay, hearing none, we will move on.
No.
Thank you. First, we do have a vacant seat, as Cindy alluded to. Frank Beam's term on the agency board has ended, and we thank him for his service. The seat will be filled by an appointment from the governor. Also, in accordance with statute, Governor Stein has appointed me as chair of the agency and has appointed Ms. Arnold as vice chair, effective as of April 8th, 2025. Moving on to our next item, we have a resolution, the first item in your packet, appointing the Secretary Treasurer and the Deputy Secretary Treasurer of the agency. Cindy, will you explain the resolution if there is any explanation beyond that needed?
Yes, just the statute calls for the board of directors of this agency, that's U6, to elect and appoint a secretary treasurer, and if you're in need, and we think we should have a deputy secretary treasurer, and Chair Briner has nominated Carolyn Hayden, who's on our staff. She's currently Director of the State Debt for the department. And Jennifer Wimmer, also not in the room. Oh, and pardon me, she's there, she's hiding. Hi, there's Jennifer, I'm sorry. Jennifer's Director of Debt Management for the department and serves the local government commission in that capacity as well. And she's being nominated as Deputy Secretary Treasurer. The duties are basically keep the minutes, keep the records, run the debt approval process, debt vetting and application process for those entities that want to come through the agency for conduit debt. Fill out forms, comply with the statutes, reporting requirements. We have at least the annual report. So, and if you have any questions, ask away.
Okay, hearing no questions, would someone like to make a motion to approve the nominations for the Secretary Treasurer?
Motion to approve the 2 nominations as set forth on the agenda.
Thank you. Is there a second?
I'll second it.
Repeat everyone to the punch.
Okay, by a second. All right.
Go ahead and call the roll.
Okay, certainly. Okay, to appoint our Secretary Treasurer Carolyn Hayden, Deputy Jennifer Wimmer, McLaughlin Bolick made the motion and second. Ms. Arnold? Oh,
Hi,
okay.
can you hear me okay now?
We do, thank you.
I'm having some technical, I apologize. I'm having some technical difficulties today. So I'm working on being on camera, but at least the mic works.
Oh, good. Okay, yeah, so
Hi, thank you.
voting on the resolution, I didn't hear you. Are you in favor?
Yes, aye.
Okay, thank you very much. Mr. Bowen?
Aye.
Thank you. Mr. Bowers?
Yes, definitely.
Welcome, Treasurer Briner.
Aye.
Okay, and that motion carries. Thank you.
Thank you very much. Moving on to the March 4th, 2025 minutes, which are in your packet. In those minutes are also included the updating maturity resolution, which has led to a couple issuers seeking to take advantage of that extended maturity opportunity, as well as some financial conflicts of interest forms. Do I hear a motion on the March 4th minutes, including those items?
Motion to approve the minutes, March 4th.
Thank
A
you.
second?
Thank you. Ms. Arnold is second.
Okay. Here, Mr. Bowers. Yeah, okay, Bowers. We'll take Bowers and Arnold. All right, approving March 4th minutes. Auditor Bolick.
Aye.
Thank you. Mr. Bowen.
Aye.
Mr. McLaughlin.
Aye.
Treasurer Briner.
Aye.
Okay, thank you. Motion carries.
All right, thank you very much. So that concludes the administrative part. We're going to move on to 2 issuers who are coming before us today. As a reminder, we haven't had an issuer in front of this agency in multiple years. They are here directly as a result of the policy change we adopted back in April, which, as we discussed, is great for the state of North Carolina to have increased oversight around folks who issue within our state. So we're excited to have them today, and we're excited to have a conversation about what they are preparing to do. With that, let's go over to Carolyn to explain it all.
Thank you, Treasurer. The first applicant that we're discussing is the Montessori School of Raleigh. Just a quick overview. We are requesting approval for a $5 million refunding. The original terms are for Series 2015 A and B for $6.5 million with a 25-year maturity. Due to the 10-year mandatory tender, we're here to do that refunding. The new lender, the proposed lender, is Pinnacle Bank. In keeping with the 25-year maturity, we're also looking at a 10-year mandatory tender. Please note, members, the agenda package that you received contains an error on the debt sheet under the category terms and term that the correct period should be 15 years, and that has been updated on the website, but just to make you aware of that. The proposal is for a variable rate. Again, the details are in the agenda. We did have an independent swap advisor advise the board members in the school so that they are aware of the benefits and risks of a swap agreement. Staff did review the school's financial statements and projections and revenue, debt service coverage, and days of cash on hand. So it appears that the school is financially responsible and capable of fulfilling its obligations. As a refunding existing public facilities, there are existing public facilities, there are no issues with that. And the school is operated to serve for the benefit of the public, and we did not find any indications of discrimination. So staff recommends this application. You happy to take any questions? Yes, sir.
First of all, what is the secured overnight financing rate? What is it now currently?
Well, what we're projected right now is at 4.86%, and that includes the spread of, I believe, 1.54%. Director Bowers, I'm sorry, I should have introduced our support here in the room. We have bond counsel for Montessori School of Raleigh, Rebecca Joyner.
Yeah, the real question I had was the cap itself. I thought the SOFR was about 4.3% right now, and with the with the 1.5, it put it at 4.8. But you have a cap of 3.46. Is the cap on just on the variable portion SOFR itself, or is it SOFR plus the 1.5%? What's the cap on? What is the cap on this deal?
I believe just on SOFR.
So the actual rate that they'll be getting is 4.86. Okay, that was the first, that was, and that's very close to the synthetic fixed rate that they're getting as well. So basically, you're saying that the rate, if it's capped at you're capping it almost at the rate now. So if rates go down, you could benefit by a little bit lower variable rate. So there's basically, we're going to fix half the debt now, period. We like it. And then we're going to take a little bit, we hope to get some gain from some reduction rate, but no risk really to it going up.
Right.
Okay, I just wanted to make sure I understood that correctly.
Any other questions?
Well, I would make one other comment, and that is that nothing is being extended here on this. We're taking advantage of the fact that they can be there, but the term, or am I wrong, is the term of the law? There is, let me look at it again. I don't think there's any extension here, is there? Is there any extent? There's no extension of the existing
The
maturity.
original 2015.
Yeah, they've just hit a mandatory purchase date, and this is the best deal that they have that's in the market for them.
Any questions online?
No, I had, this is Marcus, I had similar questions to Mr. Bowers just about the terms of the interest rate, and staff answered them via email. So just wanted to commend Carolyn and Jeff for doing that, help explain this, because it's the first one that we've seen in a while. So I think it's good to get those, ask those questions now, just to make sure we have our I's dotted and T's crossed. So appreciations to the staff for doing that. And it's exciting to see some debt finally coming through. So yeah, the only question I have was just more just holistically. I mean, Pinnacle Bank has merged with Synovus. And so just wanted to hear anybody's thoughts on that merger, and how we think it will affect honoring of any interest rate swap agreements going forward.
I mean, the only thing I could offer is I don't know that Novus has a public finance arm. So typically when there's a bank merger, if there's a merger with a bank that doesn't have duplicate services, it typically change it. So that would be my expectation, but that's probably the best I can do on that one.
I would also say that given the swaps with both Pinnacle and Synovus are based on ISDA master documents.
Yeah.
They're going to be basically under the same program because the whole industry uses the same documentation.
This is Cindy Aiken again, just for the benefit of those online, if you can't see that, that last speaker was Jeff Poley of our department staff, very experienced bond counsel in his other life, not in government. And that was, and Rebecca Joyner again with Parker Poe, their bond counsel.
Thank you for that. Yeah, I just want to make sure we have,
Be on the same page. Both the foot and the cap are for 10 years. The rates are for 10 years. After that, they'll be repriced again.
Mr. Bowen, did you have something else?
no, I just want to say thanks for the responses, and appreciate you guys looking out for them. I just want to make sure that, worst case scenario, that Pinnacle is able to perform under their swap agreements, and that when we're having people, going through these agreements, that there's just appropriate protections in place for them as they're doing that. So it sounds like that's here. So appreciate the responses.
Okay, unless there are further questions, we'll entertain a motion to approve the Montessori School of Raleigh's issuance.
I'll make the motion. Answer the questions or ask the question.
Is there a second?
Noting that they've handled the debt in the past, then they have, and the cash that they have on hand and their forecasted coverage. I'll second it.
Mr. Bowers, please call the roll.
All right, for Montessori schools issuance, Bowen Bowers, Auditor Bolick.
Aye.
Ms. Arnold,
Aye.
thank you. Mr. McLaughlin,
Aye.
thank you. Treasurer Reiner.
Aye.
Motion carries.
Thank you very much. Let's move to the second matter before us, which is Pine Lake Preparatory. Move to Carolyn to explain.
Thank you, Treasurer. Pine Lake Prep is here before the board seeking approval for a not to exceed amount of $37 million. That consists of $10 million in new money and approximately $27 million in refunding. The original terms for their Series 2015 bond offering was, again, a little over $33 million with a 30-year maturity, with a remaining coupon range of 4.3% up to 5.5%, with a debt service reserve fund, approximately $2.3 million. With the new terms, we're going with the bank's placement, also with Pinnacle Bank, with a 30-year maturity and a 15-year mandatory tender. That will be in 2040. This is a variable rate. Loan placement, with a synthetic fixed rate. Again, an independent swap advisor has been engaged to educate the board and the school staff so they are also aware of the risks and benefits of the swap. In terms of feasibility, staff also again review the financial statements and the projections provided by the school with its financial advisor. And again, the school appears to be financially responsible and capable of fulfilling its obligations. As this is primarily a refunding, the public facilities exist. And lastly, the school, again, serves and provides a public benefit, and we're not aware of any discrimination. So,
Any questions, Mr. Bowers?
It is certainly more than a refund. They have $10 million worth of new debt being requested for facilities. As best, this is a very strong school, a triple B minus rated charter school that was able to do a public offering. One of the top 100 in the nation. Their website is incredible. But looking at the transaction, there's no question they can handle the debt. It's a question of the alternatives available to them. And I kind of thought the way the debt service is accomplished is basically about half of it's due to increasing the amortization on their existing debt. The other half is due to a current refunding that should definitely be done. It frees up a debt service reserve fund of $2.3 million. And it gives interest rate savings of approximately 90 basis points with some other reduced fees as well. And that basically the two combined to give the decrease in debt service for the first 20 years. You're going to pay, if you change from a 20-year to a 30-year debt, you're going to pay debt for 10 more years. You're going to pay for that additional 10 million. It's just a matter of how you want to pay for it and what's best. And obviously, to me, it's a no-brainer. You got to do, the refunding is justified. I'm not sure I can grasp how you calculate the net present value savings. I'm assuming it was straight up, no interest rate reduction. No maturity extension, interest rate, and freeing the debt service reserve fund, giving you this 10% savings. That's my assumption. Is the FA here by any chance? Okay, I just would assume that. It doesn't matter. It's definitely warranted. The only question was, given the refunding is warranted, what would that do? It reduces your debt service, which is currently by 2.3 million to 1.9 million on the existing debt. And if you finance the new debt straight up, the 10 million would cost about 600,000. The debt service would be about 2.55 million for 10 years, and then it would fall off to the 600,000. The alternative that's on the table is to refinance all the debt for 30 years. That allows you to get the other 350,000 reduction in your debt service. Reducing your debt service from 2.3 now to roughly 2.1, 2.15, that neighborhood. You're able to take on debt and reduce it. The reality of what happens is now you pay 2.136 million, less than you're paying today, for 30 years, rather than 600,000 for the last 10. If that's the best deal for the school, great. They have the financial capability. Those are the alternatives that I see that were on the table for the school. You have to make assumptions about the rate, and currently there are some pros and cons to it. You have currently a true fixed rate debt for 15 years. You're going to go to a synthetically fixed rate debt for, for 10 years. You'll reduce your actual known by 5 years. That's not a thing saying you're still going to have a 15-year put feature where it'll have to be repriced. It's just a matter of what the school prefers.
I have a question.
Please.
So the notes say on background that the school is tuition free. What if the participants don't pay a tuition? What's the revenue stream to cover cost?
I believe we have the school representatives online.
We do. We have the director of finance and the executive director online virtually, if they want to unmute their mics. We also have the finance.
Hi. Hi, can you hear me?
Yes.
Yeah, so
Okay.
the question is, did you hear the question okay?
Yes, I did. I'm Sherry Fletcher, the finance officer with Pine Lake. And we use the state funding, the ADM funding from the state. We also, that probably comprises 80%. We also use the local education agencies funding. That's another $5 million. Also, our federal grants is about 800,000. We do have local fundraising of around 600 to 700,000 annually. we
So
run
you-
at a surplus of around anywhere from 200 to 500K a year.
So I guess what I'm getting at is your revenue stream is not dependent upon any changes to the state opportunity scholarship program that's expanded quite a bit in the last couple of years.
Correct, it is not.
Thank you.
Yes.
And I would just add, while we are a charter school, we are a public charter school. And so state dollars tied to the students would flow into Pine Lake as they would a traditional public school.
Any other questions on Pine Lake? Or okay, do I
Is
hear?
there any, I have one quick question. Is there consideration in terms of ability for parents to pay tuition, or is the premise from the school at the beginning and the outset that it would be tuition free?
As
The
a
premise is, go ahead, Andrew.
public charter school, we cannot charge tuition to our students for attending Pine Lake Prep. We receive the state and local dollars that are tied to that student, and then we can offset additional dollars and create additional revenue through grants and through fundraising.
Thank you.
Motion to approve the loan proposal for Pine Lake Prep.
Thank you, Mr. McLaughlin. Can I have a second, please? Mr. Bowers, let's call the roll.
For Pine Lake Prep, McLaughlin motion, Bowers second. Auditor Bolus?
Aye.
Ms. Arnold?
Aye.
Thank you. Mr. Bowen?
Aye.
And Treasurer Briner?
Aye.
Motion carries.
All right, thank you. So let's move on to our decennial rules review resolution. Laura, what do you?
Thank you. Good afternoon, agency members. Regarding the decennial rules review resolution, the agency currently has 11 active rules in the North Carolina Administrative Code that were adopted pursuant to the Administrative Procedure Act, or the APA. The APA requires that every department, board, or agency that has rules undergo a periodic review of those rules, and the Rules Review Commission establishes that cycle. The cycle is set at every 10 years, and so we're coming up on the next 10-year cycle where the agency will have to go through this review process. Now, the purpose of the process is to force agencies and boards and commissions that have rules to actually review the rules that are on the books, see if they're still necessary, and then later on work to update those rules as they're needed. So the decennial review has really two parts, and today we're focusing on starting part one. So part one, we will go through the 11 rules, and we need to categorize them as whether or not they're necessary or unnecessary. And in the report that's attached to the proposed resolution, you'll see that all 11 rules have been marked initially as being necessary. So right now at this stage, we're not looking to take any of the rules out of the code. In starting this part one piece, it'll go to the next step of posting this report out for public comment, for 60-day public comment, for those to weigh in on whether or not they agree with our initial classification of these rules being necessary. After that 60-day comment period, that report will come back before you at a later meeting to formally adopt that classification, and then we'll send that report to the Rules Review Commission. So at this stage, we're not doing a substantive review of the text of the rules at all. It's really just a preliminary classification to see whether or not any of these rules could drop out of the code right now. Staff took the approach that we want to keep all of the rules in the code, and at the later stage of readoption, we will take a real hard look at what the text is, getting that text updated if we need new rules, if we're real comfortable with repealing any of them, and that'll happen in part two, which will be later on down the road. So what we're looking for action today is to approve this initial classification so that we can start that 60-day comment period and get the ball rolling with this part one piece of this decennial review process.
Any questions about this process from anybody?
Motion to accept the resolution on determination of administrative rules for decennial rules review as proposed by the staff.
Thank you. Is there a second? Second. Auditor Bullock, please call the roll.
Okay, on our decennial rules determination resolution. That was McLaughlin and Bowley. So Ms. Arnold.
Do you have to step away?
Oh, okay, we just, all right, absent. Thank you. Mr. Bowen,
Aye.
Mr. Bowers,
Yes.
thank you. And Treasurer Briner.
Aye.
All right, motion carries 5 and 1 absent.
Okay, that concludes our formal business for the day. Any comments, questions, concerns from the board?
I'd like to give a shout out and congratulations to Auditor Dave Boliak. He appeared on Henry Hinton's radio show this morning and was able to catch part of that, and great presentation to the public, Mr. Auditor. And I would extend an invitation to Treasurer Brad to join him on Henry Hinton's morning show. It's a very strong signal. It reaches from the North Carolina, Virginia border all the way down to Wilmington and east of 95.
All right, thank you.
Thanks, Joe.
Okay, if there are no other comments, questions, we'll entertain a motion to adjourn. All
So
right,
moved.
Bowers. I hear a second.
Second.
Auditor Bullock.
Bowers and Bullock, and that would be she's absent. Mr. Bowen.
Aye.
Okay, thank you. Mr. McLaughlin
Aye.
and Treasurer.
Aye.
Thank you.
Thank you, everybody. We are adjourned.